Stock options have gotten kicked around quite a bit. They had their prime days, so to speak, and then they've waned in existence over the last 3-ish years. We've wondered if they would come back. And then, of course, the pandemic hit and kind of changed a lot of thoughts on stock options. But stock options are right for both the alignment, the long-term perspective for executives. The days of granting stock options all the way down to entry-level employees are largely gone and are gone. And we don't see those coming back. But because stock options have still the long-term alignment, the direct share price alignment, we think that those could come back in. And then you add to it that they are not subject to these clawback policies. We think that that's another check mark when you go through and do your evaluation. Now, some will say, of course, that stock options aren't deemed, quote, performance-based by proxy advisors, and that is true. In our experience, some of your institutional investors will at least acknowledge that those are indeed performance-based. But that doesn't mean that we can't maybe go to premium price stock options, which also would not fall under the new clawback policies as interpreted today. So we think that this is a ripe conversation to have. I think, as you said before, an influencer, this may be the final influencer to get stock options back in for that executive team. Maybe not 50, 60, 70% of the annual LTI value, but start putting that back in there, especially as share prices recover and dilution and burn rate becomes less of an issue for a lot of companies.